You have India importing 800 or 900 million ounces of silver, depending upon who you read, over the last 4 years. You have Russia now accumulating gold daily and now saying they're going to accumulate silver, platinum, and palladium. No country's ever said that. You have all of these countries that understand that resources are important and are moving in this direction. And for them to come out and say we want to issue an exchange, a metals exchange that will challenge the COMEX and the LBMA because they're fraudulent, more or less, because they are rehypothecating so very much of ownership, it's a very big deal. Will it happen? I guess we'll see. But these are the countries that have been buying it, accumulating it, and repatriating it. Wouldn't surprise me one bit to see something like that come, and as a very detrimental threat to the West.
The Russian government recently announced that it would begin adding silver to its precious metal reserves, and other countries may follow Russia and consider building their own strategic silver chests. The Shanghai market has been booming, with volume steadily increasing since 2009. According to Jan Nieuwenhuijs, at the end of 2022, China held approximately 28,054 tons of gold, split between the central bank and the private sector. Meanwhile, Russia and India continued to convert their monetary reserves into gold, importing significant quantities of the precious metal. Precious metal market expert Andy Schectman declares that India's vast silver imports and Russia's daily gold accumulation are rapidly building precious metal reserves. He suggests they create a rival metals exchange to challenge COMEX and LBMA, aiming for genuine price discovery over the West's paper-based assets. Based on recent moves, Andy explains that Brics nations, especially China, bypass Western exchanges by purchasing raw metals directly from Latin American miners at premium prices. China takes the top spot as the world's largest importer of silver ore, with an import value of $4.2 billion in 2023. Chinese silver imports could surge in the coming weeks as traders take advantage of a jump in demand that's taken prices well above the international market. Furthermore, Andy discusses a strategy by Brics countries to accumulate commodities, highlighting their methodical depletion of above-ground stockpiles on Western exchanges. In recent months, the Shanghai Metals Exchange has outpaced COMEX with a 5,600% trading surge. It requires physical metal backing and tracks for each bar, unlike COMEX, where contracts are often resold with minimal physical support. Now, we present the clips of Andy Schectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
For the past year or so, we have seen, in my opinion, the Brics countries employ what is very much like a three-pronged approach to accumulating commodities. And the first one, I would argue, is that they have been gradually depleting the above ground stockpiles on the Western exchanges. And they have been. We saw 8% of the LBMA silver float delivered in the month of August. We've been seeing for 3 years now huge deliveries, whether they be in exchange for delivery, where contracts are bought on COMEX and delivered to Brics Hong Kong. That's an exchange for delivery contract that was built or came into play in 2015, 16, or 17, and it's been exploited quite a bit since. But we're seeing metal come off, being delivered off of the Western exchanges very meticulously, using the suppression of the Western paper market, which is massively short. The commercial banks are holding down the price of gold and silver to the best of their ability. They're caught, and in the respect that these countries now are coordinated and motivated and sophisticated, and they're standing for delivery. This is something that never happened before, where these contracts would be placed where, as an example, in silver on the LBMA, you have close to 2.9 billion ounces of silver traded per day. That's 3.5 times annual global mine supply, and it is 90% paper. The commercial banks control the price. They're short between 4 and 6 billion ounces on the LBMA, somewhere between 700 and 800 million on COMEX. These banks are as dumb as a mud wall because these countries now are coordinated and are standing for delivery, something we never saw before, which is a systemic risk, actually, for the banks, ultimately. The second thing they've been doing is we've been seeing these types of products grow, or the exchanges that are trading these products in their regional regional capacity. What I mean by that is that, for example, you see the Shanghai Metals Exchange, and over the past 6 months, the combined volume of the Shanghai Metals Exchange and Futures Exchange has increased 500-600%. It now actually outpaces that of the COMEX. It is the second most actively traded metals market in the world. There's way more silver in the form of contracts than there are bars standing behind it. These are all very, very troubling things, but the West is stupid enough to continue to do this, and these countries not only are draining the exchanges, but increasing the demand and legitimacy of their exchanges in Dubai and in Shanghai, et cetera. Lastly, they've been flying, like China, as an example, has been flying all around Latin America. I did an interview with Sean Kunku, and I know you know him, and he's a great guy. And he validated, he said, listen, Andy, they're flying around Latin America. They're going directly to the miners, and they're saying, we will buy your Doré bar, which is a crudely refined bar by the miner before it gets sent for further refining, maybe 40-50% pure, and concentrate, which is a byproduct, it's like sludge. They're buying it, paying much more than the West will, and shipping it back to China to further refine, disintermediate it from the markets and the exchanges and the commercial banks. They're already the second largest producer of silver in the world. You have India importing 800 or 900 million ounces of silver, depending upon who you read, over the last 4 years. You have Russia now accumulating gold daily and now saying they're going to accumulate silver, platinum, and palladium. No country's ever said that. You have all of these countries that understand that resources are important and are moving in this direction. And for them to come out and say we want to issue an exchange, a metals exchange that will challenge the COMEX and the LBMA because they're fraudulent, more or less, because they are rehypothecating so very much of the ownership. It's a very big deal. And will it happen? I guess we'll see. But these are the countries that have been buying it, accumulating it, and repatriating it. Wouldn't surprise me one bit to see something like that come, and as a very detrimental threat to the West.
Central banks cite three main reasons for holding gold: its long-term value, performance during a crisis, and role as an effective diversifier. Seasoned market analyst Andy Schectman highlights how the G7's move to use frozen Russian assets for a $50 billion Ukraine loan reflects Western sanctions' impact on global currency stability. Concurrently, he explains that many countries are seeking financial protection by increasing gold reserves. Smaller nations like Poland, India, Turkey, Uzbekistan, and the Czech Republic are adding significant amounts of gold, indicating its rising value as a stable monetary asset. Almost 60% of rich countries' central banks believe that gold's share of global reserves will rise in the next 5 years, up from 38% of respondents last year, according to an annual survey conducted by the World Gold Council, an industry promotion group. While shifting towards another aspect, Andy underscores the growing concerns over counterparty risk in the financial system, citing the overlooked bank failure in Lindsay, Oklahoma. Ultimately, he points out that gold and silver are unique, liability-free assets that become more appealing in times of global instability. Let's get back to the interview.
You turn on the internet yesterday and you see the headline, the group of 7 G7 leaders have finalized an agreement to channel profits from frozen Russian assets into a $50 billion loan for the Ukraine, according to a statement. I think when you talk about the way that, the West is imposing these sanctions, while at the same time destroying the value of the currency, and you can have the State Department say something as insane as, any challenge to the SWIFT system and the dollar is a direct threat to global democracy. Well, this is exactly. And then to see the BIS do what is in essence, you're right, espionage, if you will, at the 12th hour. This is crystallizing what these countries, I think, are feeling. And you mentioned, about gold. Look, when you see that the central banks buying gold the way that they are, it should tell you that gold is a monetary asset. And to your point, these smaller countries, interestingly enough, I do want to mention Poland. They added 18.7 tons, as did India. Turkey, who is a NATO member, officially applied to Brics 14.7 tons. Uzbekistan 7.5, Czech Republic 5.89, and others. A lot of these smaller countries are adding. And then, if you haven't read The Great Taking by David Rogers Weber, watched him narrate his story on YouTube, you understand, I think, deeply the concept of counterparty risk in a systemic world. And it's growing. I don't, you look at what happened in Lindsay, Oklahoma last week with the bank failure. I would argue it was the first bail-in in the United States, and not a word from the media, not a word. And it's a bail-in. These things are beginning to become systemic. And I think, you add into it the pressure that's mounting across the globe, countries pushing back against so many of these things. We don't have our act in order at home either. So this, to me, when you talk about potential risks, it is of a counterparty risk nature. And that's one of the things that I think is most often overlooked when we talk about gold and silver, is that it's assets in your own possession that are no longer or at simultaneously no one else's liability. And so that's a big deal in my mind. And I think that's a big deal in the Brics mind too, in that, as you can see, even trusting an entity like the BIS proved to be a liability, and they had counterparty risk there. They'll start to just in-house all of this stuff and build their alliance free from any Western interference. And it's funny because in their statements, they talked a lot about the WHO, the IMF. They said they wanted a new Bretton Woods, but they strived to be within a framework of the IMF. They wanted to assimilate. Instead of being coercive, they were actually, which was kind of weird to me, kowtowing, it seemed, to the West. This may put a fork in all of that and just accentuate the differences and the divisiveness between these two groups. That's for sure. But yeah, I think there's a lot coming down the pike, and what happened in Lindsay, Oklahoma is just the tip of the iceberg.
Whether it's through the cultural significance of gold, the diversification of reserves, or their role in potential monetary reforms, the Brics Group remains a pivotal force in the glittering world of gold. The Brics nations are pursuing a strategy beyond mere de-dollarization. Their ultimate aim is de-Westernization. What implications will the Brics nations' growing focus on gold and silver reserves have on the future of global financial systems and the dominance of Western markets? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.